The best low-risk, high-reward investment strategies for 2025. Smart, stable, and profitable ways to grow your money this year. In a market landscape shaped by shifting interest rates, rapid AI growth, and global economic uncertainty, the search for low-risk, high-reward investment strategies has never been more important. The good news: 2025 offers more opportunities than ever for investors to grow wealth without taking on unnecessary risk. Below are the most reliable, beginner-friendly, and forward-thinking investment strategies that can help you increase returns while keeping your financial foundation solid. 1. High-yield savings Treasury-backed investments. Safe, steady growth. With interest rates stabilizing at attractive levels in 2025, high-yield savings accounts, money market funds, and short-term U.S. Treasuries remain some of the safest ways to earn predictable returns. Why?S low risk. FDIC NCUA or government-backed. Very low chance of loss. Highly liquid. Why?S high reward relatively. APYs are historically high. You can easily rebalance or reinvest. Best for emergency funds, conservative investors, first-time investors, and anyone wanting risk-free returns. 2. Dividend growth stocks. Stable income plus upside potential. Dividend-paying companies, especially those with a long history of annual increases, offer one of the best long-term risk-adjusted return profiles. Why?S low risk. Backed by profitable, established companies, dividends provide steady income even during market dips. Why?S high reward. Compounding dividends accelerate growth. Dividend stocks tend to outperform during volatile markets. Sectors to watch in 2025. Utilities, consumer staples, healthcare, AI-enhanced industrials. 3. ETFs for defensive growth. Diversified, future-focused. Exchange-traded funds remain a powerful vehicle for low-risk investing. In 2025, investors are gravitating toward total market ETFs, broad, stable growth, low volatility ETFs designed to reduce drawdowns, AI, automation, and semiconductor ETFs, future-focused growth with lower risk through diversification. Why?S low risk. Spreads risk across dozens or hundreds of companies. Lower fees, lower volatility. Why?S high reward. Exposure to booming sectors without picking individual stocks. 4. Real estate crowdfunding. Property gains without the hassle. Real estate remains an inflation-beating investment, but you no longer need to buy property to benefit. Platforms now let you invest small amounts in rental properties, commercial buildings, and development projects. Why?S low risk. Backed by real assets. Managed by professionals. Why?S high reward. Passive rental income. Appreciation potential. No landlord responsibilities. Perfect for investors wanting real estate exposure with minimal commitment. 5. Bond ladders. Predictable returns with zero guesswork. In a world of fluctuating rates, a bond ladder, buying bonds set to mature in intervals, gives investors safety plus flexibility. Why?S low risk. Guaranteed principal return if held to maturity. Smooths out interest rate risk. Why?S high reward. Allows reinvestment at higher future rates. Offers steady, predictable income. 6. Certificates of deposit CDS with APY bonuses. Banks in 2025 are competing fiercely by offering CD rate booster options that increase your APY during your term. Why?S low risk. FDIC insured. No market exposure. Why?S high reward. Rates are higher than long-term averages. Bonuses protect against falling interest rates. 7. Stable blue-chip tech AI-enabled companies. While tech is typically viewed as high volatility, certain mega-cap, cash-rich tech companies have matured into low-risk, high-reward powerhouses. These companies dominate AI, cloud computing, and hardware sectors, expected to continue explosive growth through 2030. Wyatt's low risk, strong balance sheets, global brand dominance, consistent revenue. Wyatt's high reward. AI continues to be the fastest growing sector. Enormous profit margins. 8. Inflation-protected securities, your shield against rising prices. Tips and inflation-linked bonds offer guaranteed protection against inflation, something still relevant in 2025. Wyatt's low risk. Backed by the U.S. government. Adjust value based on actual inflation. Wyatt's high reward. Outperforms standard bonds during inflationary cycles. The smartest investment strategy for 2025. Balance. The perfect low-risk, high-reward portfolio often includes a mix of Treasuries or high-yield savings, safety, dividend and AI-focused ETFs, growth, real estate or bonds, income. This balance protects your money and positions you to benefit from opportunities in 2025's changing market. Final thoughts. Low-risk investing no longer means sacrificing returns. In 2025, the smartest investors are those who combine stability, diversification, and exposure to long-term growth trends like AI, clean energy, and real estate. Whether you're rebuilding your first portfolio or strengthening an existing one, these strategies offer the safest path to strong, steady wealth growth this year.